There may be a buyer hiding in plain sight inside the SpaceX IPO story. Not a billionaire, not a hedge fund, and not someone who woke up one morning and decided they love rockets. It could eventually include ordinary investors who never actively chose SpaceX at all. The reason is buried inside the rules of modern investing. SpaceX may be about to launch the largest IPO in history, not a rocket. The company is reportedly targeting a valuation of around $1.75 trillion. And the company reportedly lost nearly $5 billion last year. And ordinary investors may be invited in at an unusually large scale. So here is the uncomfortable question. Who exactly is buying this? Because the answer may eventually include people who never actively chose SpaceX at all. Now, none of this automatically means SpaceX is a bad company. That would be a ridiculous claim. SpaceX launches rockets. It sends satellites into orbit. It connects customers to the internet from space. And it has turned reusable rockets from science fiction into something that now looks almost routine. But a great company and a great IPO are not the same thing. A restaurant can serve amazing food. That does not mean you should pay $1.75 trillion for the menu. Most people still picture SpaceX as a rocket company, but the company going public is more complicated than that. SpaceX is easier to understand as a machine with three very different engines. One engine is the launch business. Another engine is Starlink. That engine turns satellites into internet service. And the third engine is xAI. So when investors look at SpaceX, they are not looking at one clean, simple business. They are looking at rockets, internet satellites, and artificial intelligence, all inside the same container. The easiest part to understand is Starlink. A customer buys a dish. The dish connects to satellites. The customer pays for internet. Simple. That can mean internet for a house in the middle of nowhere, Wi-Fi on a plane, a connection on a ship, or service in places where traditional broadband is slow, expensive, or unavailable. This is not science fiction. It is a real product with real customers. And Reuters reports that Starlink is the main profit-generating part of SpaceX. Then there is xAI. This is where the story gets harder to price. Artificial intelligence can be exciting. It can also be extremely expensive. Servers cost money. Chips cost money. Electricity costs money. And data centers do not build themselves. The SpaceX IPO is therefore not simply asking public investors to place a value on a rocket company. It is asking them to place a value on rockets, satellites, internet service, and an enormous artificial intelligence ambition, all at the same time. That is a much harder calculation, and this is where the numbers become interesting. SpaceX is reportedly targeting a valuation of around $1.75 trillion. But Morningstar recently estimated that the company may be worth closer to $780 billion. That is not a small disagreement. That is a gap of nearly $1 trillion. Same company, same rockets, same satellites, very different price tag. The IPO itself also looks unusual. Reuters reports that SpaceX is planning to price the shares at $135 each. That specific number reportedly appeared before the investor roadshow even began. Normally, companies give investors a price range first, then bankers test demand. Then the final price is decided. SpaceX appears to be arriving with the price tag already attached, and up to 30% of the offering may reportedly be allocated to individual investors. That is a lot of attention directed towards retail buyers. But retail investors are only part of the story. A huge amount of modern investment money does not choose individual companies. It follows rules. An index fund does not wake up in the morning and ask whether it likes rockets. It tracks an index. If the index changes, the fund follows, automatically. That is the whole appeal. Low fees. Broad diversification. Less emotion. But automatic systems can create automatic demand. And this is where timing matters. On May 1st, Nasdaq introduced updates to the Nasdaq 100 methodology. The changes followed a public consultation. They were not officially described as a special SpaceX rule. But one part is especially relevant. Under the new rules, a very large, newly listed company may qualify for fast entry into the Nasdaq 100. If it meets the requirements, that could happen after roughly 15 trading days. Previously, companies generally had to wait longer. So imagine the timeline. SpaceX goes public. The stock begins trading, and within weeks, not months, it may become eligible for one of the most widely tracked growth indexes in the world. If SpaceX enters the Nasdaq 100, funds tracking that index may need to buy shares. Not because every fund manager suddenly developed a passion for Mars, because that is what index tracking means. The index changes, the fund adjusts, money moves, and even uncertain investors may face an uncomfortable choice. Join the excitement or risk watching one of the largest IPOs in history rise without them. Nobody wants to be the last buyer. But nobody wants to be the only person left behind either. And if the number of publicly available shares is limited, a large wave of automatic buying can become important very quickly. That does not prove the stock is overpriced. It does not prove the stock is underpriced. But it does raise a simple question. How much time does the market get to work that out? There is one important detail. Reuters reports that this IPO is planned as an all-primary offering. That means the money raised is expected to go into SpaceX. It is not simply a case of existing shareholders dumping their shares on the public during the IPO. That matters. But the larger question remains. SpaceX may turn out to be one of the most important companies of this generation. It may also become one of the most expensive IPOs ordinary investors have ever been invited to join. Both things can be true. This is not a prediction, and it is not investment advice. The real question is simpler. When a $1.75 trillion company arrives with limited public shares, major retail interest, and a faster route towards index eligibility, does the market have enough time to decide what SpaceX is actually worth?